Welcome back to the show. Let's talk to Charlie Burton, the founder of Easy Trader. Charlie, greetings. Morning to you, young man. You sent me a cracking little email, okay? I was considering discussing the following on Wednesday. Revenge trading. Got lots of thoughts on that, young Zach. Profitable periods.
Other areas I have.
Well, yes, exactly. Don't interrupt. Profitable periods versus unprofitable periods of the trading day. And that, again, the trading day, that was interesting.
Yeah.
Trading for income versus trading for speculative gains.
Yeah.
Cracking headlines. Let's talk. What is revenge trading?
Well, revenge, it's funny. I had an email come through a while ago from a trader.
Yep.
And he'd had a good spell, good period, like a lot of traders do. And then in the space of one day, he started off the morning, put a trade on, had a profitable trade. His next trade was unprofitable. But the problem is that he got overconfident from his prior good run. So he was now just had a losing trade, wanted to make back those losses, went straight into another trade, had another loser, and before he knew it, he was 13 trades down and down 40% on the day on his account.
So that's called doubling up the wrong way, isn't it?
God! Well, I don't know if he was doubling up or just taking bigger and bigger trades and more trades, way over traded, and so all he'd done is revenge traded, trying to get back those losses.
Right.
And it's something that happens all the time with traders. So I thought it'd be a good topic to have a brief chat about. And it's one of those things that the day can start off very normal and then it becomes a crescendo, snowball effect, and all of a sudden the trader is just down 40% and they're emailing into me saying, what should I do? And they're still in positions. So all I can do is say, well, you made mistakes, you've got to come out and you've got to absorb that. But it happens all the time with traders. And the only thing I can say is you've got to self-analyze throughout the trading day. Or if you're a swing trader, you've got to be doing it on a week-to-week basis as well. Constantly be on top of yourself, because if you don't, very quickly we're sat in there in our home offices at home, clicking away on a mouse, and before we know it, we've got ourselves into a lot of trouble.
Yep.
So we have to self-analyze. If I'm going to take this next trade, is that trade, if I take it and it loses, am I going to regret this? And it's asking those questions to yourselves all the time, rather than just thinking, how much money can I make? Think about, what happens if I lose? Am I going to regret this?
But isn't it the case that, that you've got a trading day, you just say, well, there are going to be 3 trades, I'm going to do 3 trades today, and that's it, I'm going to walk away, whatever happens. Is that any use?
That's a beautiful thought process, yes. But most people, most people have a 3-strike rule, and it's the good thing to have in your trading plan. But once they're in the thick of things, because they're on their own, we're human beings, and we get into the thick of it, and the markets are moving, we think we're missing out on lots of potential gains because it's a really big day in the markets, like yesterday or whatever. And before we know it, we're trapped, and we've just done, not 3, we've done 10.
But is there a target amount of money to win or lose in the day? That's the other thing. That would be maybe an easier to say, well, if I'm up 500 quid, I'm going to stop. If I'm down 200 quid, I'm going to stop as well.
Totally.
Is that... But the problem with that is it doesn't make any sense with the market, because the market might be you might be able to read the market that day. You stop at 500, but you could have made 1,500.
Yeah, greed, isn't it?
It's not greed.
Well, it could be. It could be. Yeah, the thing is I'm trying to keep traders on a level playing field mentally. Of course, they could make 1,500, but too often what traders do is they go back into that market again thinking, oh, this could be a £1,500 day, for example.
Lose 500.
And they go and give it all back. They have a really cracking morning, give it all back in the afternoon. I see it time after time.
So then maybe isn't the best thing then to do just have the lower limit in terms of the loss side? And just say, well, if I lose more than 200, then I'm out. So you can keep plugging away, but you don't have an upper limit, because that would be that's a bit like sort of cutting a winning position in a bad way.
You can go back, 100 years, and people would say, all right, there's days where you see the money sitting in the corner. They're the days where you've got to grab it and make sure you leave some on the table for everybody else on the floor or whatever it is. They're the high conviction winning days. The vast majority of days, you don't see the money sitting in the corner. And that's why you can't say, I need to make 500 quid every day, because this job is like no other job.
No, the markets aren't willing to give it to you every day.
And they won't, absolutely.
You can only take what the market's willing to give you.
Perfect.
But coming back to your point though, Zach, it's all very well saying 3 strikes and you're out, £200 max loss and you finish trading. But we all know that traders don't adhere to those rules. They know that they should, but when they're in the thick of it and things get emotional, all of a sudden they're down 200, and all of a sudden they're thinking, actually, no, I'll take this next trade because that looks really good. Then they take that next trade and then they're down £300. They've ignored their rules. Then they're trying to get it back to minus 200. Before they know it, they're down minus 500, and it just escalates.
But do you have any sort of way of, helping people get around this? I mean, is there any...
It's all mindset, yeah. It's about like I said, asking yourself key questions before you go into a trade. So I always say to traders, look, before you take this next trade, you've got to ask yourself, will I kick myself if I take this trade and it loses? There's nothing wrong with having a losing trade if the setup's good. But what happens is if a trader's taken an emotional trade and then they kick themselves after because they know it wasn't a good trade, put Post-it notes around. We had a psychologist we've worked with years ago, and he said actually have like a little mascot on your desk or a little teddy bear or whatever you actually physically talk to. Yep. Like if you had someone in the room with you, if you or I were sat there looking over someone's shoulder, you can bet they wouldn't be trading the way that they would do if they're trading on their own because they know that someone's watching them. And it's like have any trick that's in the book that you can use to try to stop yourself from behaving badly, really.
Okay, let's talk about, we've got 3 minutes left because we could talk hours on this and we won't get a natural conclusion. Profitable periods versus unprofitable periods of the trading day. Am I more likely to make money breakfast, lunchtime, evening meal?
I think you're more likely to make money in the morning than you are in the afternoon because we all deteriorate as we go through the day, especially for traders. We tire. We don't realise we're tiring mentally, but we do. And we're more likely to make trading mistakes in our analysis as we go through into the afternoon and evening. So if we are there in the morning, very often that's our most profitable period. We've done some research with our traders and very often their most profitable periods are in the morning, and actually the rest of the day they should be watching the markets and just enjoying and learning from the markets, but actually testing and doing all those other things. But for a lot of traders, they don't track their most profitable period. So I would say keep a spreadsheet, log all of your trades and the times of the day that you trade, and look at your most profitable
That's period. A really good tip. Trading for income versus trading for speculative gains. I've got my British gas bill here. And this is how I used to trade over the summer. Okay, I'm thinking, right, I don't care. I want high conviction, and this is why I set up Tip TV, whether it's a football match, a stock and indices. I'd watch the people on Bloomberg, CNBC, whoever it was. I was looking for high conviction, okay? How do I get income versus punting the markets? Because I've got British gas on the line too.
As you know, I've just finished that 2-year speculative challenge to turn that 10K into 100K. That was a speculative challenge where I was really trying to gun for it. That's fine because I can cope with having drawdowns if I'm trying to go for speculative gains. But if you're trying to trade for income, you can't afford to have larger drawdowns because you might be wanting to take an income on a monthly or bi-monthly basis. So it's all about those key decisions you make. Just like we've said earlier on, sometimes you might have had a profitable morning. I've already made my target for the day while I was on the train coming in this morning. And that's it. I won't trade the rest of the day now because I'm now trading for income. That speculative challenge I'm continuing for the next 2 years. And 70% of our traders said they'd like me to demonstrate trading for income, which is a slightly different, it's just decision making really. So lowering the leverage, lowering the gearing, and ensuring that once you are up for the day, that actually I don't go, when I was trading for speculative gains, when I was up £500, for example, in our example earlier on, I would still go for that 1,500 if it looked like it was on. Now I'm trading for income. No, if I hit target, that's it, I'm done for the day. Slightly different decisions, but it's hard sometimes when someone's already made their profit by 9 o'clock in the morning to then sit back for the rest of the day and not trade. It's all about discipline.
You can go down the wine bar with Zach at 9 a.m. every day. You made your money.
It's a bit early for me, actually.
Or a bit late.
10:30 then.
Okay, with Charlie. Cracking stuff. A man who's made his money on the train, okay? You need to get on my train every morning, right?
I wish it was that easy
you'd be trading standing up. Charlie Burton, brilliant stuff. We'll see you in a fortnight's time.
Thanks a lot.
Let's take a very quick break. We'll be straight back. Who have we got? We've got Mr. Bill Blaine, the man who talks about his porridge, a man who's just come back from a honeymoon, a man who's been sailing his boat. Can't wait to see what he's got to say. Straight back after the break. Thank you.
Brilliant.